Okay, so here we have a club account question from the year 2002, and I just want to take a moment to go through the loan repayment working. So here's a loan repayment and the credit side of the bank account. It says repayment of a €12,000 loan at the end of the year, 31st of the 12th, '01, together with 1.25 years interest. And that cost the club 13,500. There's the money out of 13,500. So the loan itself was 12,000. There's interest of 1.25 years as well that they've paid, and that's 13,500. So if we go over here and we have a closer look at that, the repayment of the loan is 13,500. Now the actual loan is 12,000. So if you take that away, the differing amount or the remaining amount is the 1,500, and that is the total amount of interest. Now, it's 1.25 years interest, and it was repaid at the end of 2001, the end of um, December. So therefore, if you go back 15 months or 1.25 years, if you go back 15 months from the 31st of the 12th, well, you'll find that 12 of those months will bring you back to the 1st of January, which is this year. And then you have to go into December, November, and October of the previous year as well, which is the year 2000 in this case. So the 15 months is made up of 12 months in the year 2001 and 3 months in the year 2000. Now, from our accounting perspective, we need to separate our 1500 here. And we divide it by 15 because it's 15 months payment, and we multiply it by 12 for this year, and then we multiply it by 3 for how much it is for last year. So you're taking the 1500 interest and you're saying how much of it is relevant to this year's accounts, 12 months, all the way from December back to January, and how much of it is for the previous year, 3 months. Now, where do these items go? Well, this year's interest for the 12 months, the 1200, is an income and expenditure expense. We have to pay interest on our loan, and that's how much we have accrued this calendar year. But the 300 itself, well, that should have been due to be paid. That should have been paid on the first day of January, but it wasn't. It wasn't paid until 12 months later. So therefore, it was due at the start of the year. So therefore, it goes into the accumulated fund as a liability because it is an expense due at the start of January. And likewise, the actual loan itself at the start of the year, at the start of the year, we would have owed that 12,000. It is a liability at the start of the year. So therefore, it's also an accumulated fund liability. Now, it's not going to be in the balance sheet because we have actually repaid or discharged the loan before we write the balance sheet at the 31st of December. But we did owe it on the first day of January. So therefore, it's an accumulated fund liability. Those three numbers go in. The 13.5 and the 1500 are irrelevant to us now. We've separated it out to get the more relevant numbers.